Welcome to the Fast Money Halftime Report. We are getting to the heart of the action as it is happening. Stocks sliding as financials fall apart, and the Dow suffers its fourth consecutive triple-digit swing. Where can you profit and protect in today's tape? Let's get to the word on the street right now. Your Fast Money crew today, the negotiator, Guy Adami, John Nigerian of OptionMonster.com, Eugene Profit of Profit Funds, and Scott Redler of T3 Capital. Dr. J, you've been noticing an explosion in terms of the volume of turnover in these financial stocks. Have you also noticed an explosion in the volatility of these stocks as well?
You bet it. You nailed it, Melissa, and I'm not surprised because you know this stuff inside out. Volatility is a big thing. Of course, we talk about the TEL being unusually bearish or whatever. Certainly it's been that, in particular for JP Morgan. They've traded 66 million shares today versus an average of about 35 million. Morgan Stanley trading about 35 million versus 14 million. Goldman Sachs, triple normal as well. And Goldman got down to that September 2nd low, which was 158.14, broke through that, and then exploded back above it as soon as the president finished his speech.
Yeah, let's say, I'm going to stay with you, Dr. J, for just a minute. Let's say you're like your brother Pete. You hold Morgan Stanley. You didn't use the opportunity when vols were down to buy protection to the downside. In today's tape, with the volatilities of these stocks exploding, is it too late?
Yes, it's too late to buy into that volatility right now. You could still protect yourself by buying one put and selling a put underneath it, a put spread. But yes, if you're buying insurance right now, it's like waiting until the hurricane hits Florida until you call Allstate. They're going to charge you way too much money.
Yeah. Okay, Guy Adami, you've been all over this trade. You've been saying that the likes of Wells Fargo, the likes of JP Morgan, they could be shorts. What do you do at this point? Is there more downside in your view? You've been right on this all the way up, all the way down.
I think the best defense is a good offense, and I would push here. I think I think shorts are in a position of strength where they've been playing defense. I think now they can play offense. Doc brings up a great point. Volatility is much too expensive to try to buy protection, but I think you could be stepping on the accelerator here. There's nothing that indicates to me that these things are going to make a meaningful bounce. Now, a meaningful bounce to me is, bounce off the lows and correct 10%. I don't think you're going to see it. I think now rallies are going to be sold into, and I think shorts could be aggressive here.
All right, let's get to the chart of the day because this really exemplifies what we're talking about. And Scott, you've been watching Goldman Sachs. We should note too that Morgan Stanley, JP Morgan, all of these stocks also breaking through technical levels, but here your focus, GS.
Yes, and I agree with both these guys. Now's not the time to get your insurance. You needed to read the signs over the course of the last week as these poor technical indicators have added up. And right now, you can press on the short side. The bears are getting a bit aggressive. With Goldman Sachs right now, we now have a macro bearish head and shoulders top. The neckline has been pierced. That's about 160, even in coordination with that 200 day around 159. What typically happens, it pushes through, it stops out the lungs, comes back up. There's a little bit of a retracement, but like Guy said, if it doesn't bounce more than a decent sized bounce off the lows, you could then short that rally. And I do think the measured move of Goldman Sachs to the downside is probably about $130 to $135 a share.
Eugene Profit, Wall Street in general does not like taxes. Wall Street does not like uncertainty. Here we have a double whammy, really a combination here that is trouble for the stock market. What do you do here? Do you just swallow it and do you buy in thinking, these are levels that we will, we could go more to the downside, but in a year, in 2 years, these stocks will be higher?
Yeah, Melissa, this is where fundamental investors have an issue. Going back to what we're talking about with Goldman Sachs, for instance, we have a $200 price target, and Goldman had good earnings coming through. So even though I hear technically it could go down to $130 a share, I think you buy Goldman here.
All right. Let's get the intraday trade as well and get the perspective of Gary Kaminsky, who is on the fast line. Gary, what are you doing at this point? Are you shorting any of these names?
Yeah, hey, Melissa, all I can say is wow. I feel a little bit like Bill Murray in Groundhog Day, but, again, it's about these overowned stocks that have had good numbers, that were the winners of last year, which continue to be the source of funds. If I owned Goldman Sachs, I have no position. I'd be concerned about three things right now that I'd want to know. Number one, will this new comp-penny ratio structure, will that have an impact in terms of people wanting to leave the firm? Number two, will the multiple that these things trade at, which have, if you go back and you look over the last decade, there are times where the investment banks traded at higher multiples.
Gary,
I don't have an answer to that question, but that's
I'm going to interrupt you for
know.
just a moment here. You're introducing some fundamental analysis to a situation where there is no sort of rationalization. There's no rationale. All we know is that they're going to come in here and they're going to impose restrictions that could change the face of Wall Street. How do you value these stocks in light of that?
Well, Melissa, that's the point. The point is, if you're going to own Goldman Sachs, are you going to be comfortable owning it at the same projected multiple, price earnings multiple, when you're not certain what the nature of the business model will be?
So stay away is your bottom line.
That is a question that I don't have an answer to, but if I own the stock, I'd certainly want to know.
If you were a fund manager still, Gary, used to manage a lot of money, would you sell?
I would not want to own Goldman Sachs here until I understand what the new game rules, what the new rules of the road are. Additionally, let me make one other point. There's another, in terms of the short-term action in the stock.
We got to get going, Gary.
There are a lot of employees that own a lot of stock. Some of that stock will come free. They'll be able to sell that stock. If you're going to work there and get more stock, my guess is you're going to want to sell stock you get to take some off the table. All
right. Got it, Gary. Thanks so much. Gary Kaminsky on the Fast Line. Time now to take your position. We're watching, of course, Google after the bell here. You know, I was talking to Yusuf Scully over at Jefferies, and he said, you know, Google can knock the cover off the ball, but fact of the matter is we're entering a seasonally weak period for these stocks, and typically the industry trades down. 5% lower is what he's looking at. Scott Redler, what did the charts tell you?
Well, the charts tell me that the complexion of this market has changed. The uptrend that's intact since July has been broken on the S&Ps. And Google already broke its 50-day. There's uncertainty with China right now. So I think right now, even if it's a good report in Google tonight, you know, people are going to sell into that. So I wouldn't be positioning long into that if you don't have a position, and if you do have a position and you haven't sold calls already or hedged it, you better do that before this report.
Dr. J, you're going to be watching the conference call for us tonight at 5 p.m. Eastern Time. What are you looking for? What do you expect? How do you think the stock is going to trade tomorrow?
Key word is going to be China. We're going to be watching for how many times that comes up and exactly what their exit strategy is. If there's an exit strategy, I don't think there will be, but I agree with Scott. I think this stock is going to be vulnerable after the call.
Okay. And now let's get to some options action. Dr. J, you're watching some heavy activity in the ag name.
Yeah, potash. Broadpoint came out and pounded the table for him, and then Soleil came around and slammed the door on him. The market's been very weak, obviously 2% sell-off, but this name continues to see very active buying of at and out of the money calls. Watch this one going forward. The ags have made an adjustment to the downside. You're getting in at a cheaper price, but I would only do it with spreads, Melissa. I wouldn't buy options naked here.
All right, got to take a pause here on the halftime report. On tonight's Fast Money, we've got all the after hours action on Google, American Express, and AMD. Plus, we'll be closely monitoring that conference call by Google to bring you the latest developments, and we'll give you the trade live. Still ahead on Power Lunch, should we bring back Glass-Steagall? Senator Maria Cantwell thinks so. She's sponsoring a bill to bring back Glass-Steagall. It's her first interview since she announced the bill. Halftime's back right after this.
Strong earnings fueled market gains last year, but judge